ARM Securities as well. Good morning to you all. Lots to discuss, Temitope. I guess fund managers are, or rather, before I even get there, well, what's one of the topics we'll touch on? Fund managers offering more USD mutual funds to retail investors, I guess, because of where things are. Also, the United Nations Trade and Development Division showing that with their reports that just came out, well, 2 days ago, that foreign direct investment fell by about 7 billion or so, 16% year on year, falling into Africa. I guess, I don't know, we can pick whichever one to begin. We're going to do with the FDI. Timmy, can you see the African region recovering? I don't know whether it will be this year or next, with respect to getting those lost funds back into the region as far as foreign direct investment is concerned.
Good morning, all. I can definitely see some recovery. Whether it will be this year, I'm not sure. But I think it'll all be tied to this economic recovery in the region, and just getting a grip or a handle on the COVID situation in member nations. So I think as soon as economic recovery picks up, especially I think if you look at the reports, commodity exporting countries suffered a sharper contraction in FDI. So I think again that's another, especially like for African countries, like exporting of commodities is a huge issue. So that's another thing that would affect the return of FDI. So I think commodity prices are recovering, but once that recovers some more, and then economies start to grow, they start to record stronger growth, and they seem to have a handle on the COVID situation, I think we can see FDI start to return.
How do you see competition between each region, Northern Africa versus Southern Africa versus East versus West versus Central Africa? How do you see that competition playing out between each region?
So far, if you want to look at it in terms of like the competition, you can say like Central Africa, if anything, are probably, surprisingly winning, because again, if you look at the report, they are the only region to not record a decline in FDI last year. So in that sense, you can say that winning. But I think the likes of North and Southern Africa have always been the favorite places for FDI investment over the years. But again, I think once they return to growth, especially South Africa, they're having a tough issue with COVID there. It's not a pretty picture that they're being painted there. But I think once, hopefully, they might sort that out, we should see a return to the trends we've seen in the past. I don't think there should be any change up because of COVID. I think once things settle down and everyone's back to growth, we should see a return to what we've previously seen.
What do you think foreign investors want to see before they deploy funds in whatever region it is?
They just want to see growth. They want to see your economy back strong, growing. They want to see your commodities doing well, especially commodity-dependent economies. They want to see your commodities doing well, and it's just so that they're just looking for opportunities to make returns, and those opportunities improve and increase when your economy is strong, when your commodity is doing well. That's giving you a good source of revenue, and that creates more opportunities for them to increase the value of their investments. And obviously, they want to make sure your economy is healthy. You've seen the effect that COVID has. Once COVID numbers are surging, you see how that slows down the economies. So they want to make sure you have that under control. I think those are the major things these investors are looking at before jumping right back in.
All right, great. Again, for those who are just tuning in, we're looking at new United Nations Trade and Development report showing that foreign direct investment into Africa fell by about $7 billion, I think 16% year-on-year fall. And we need that foreign direct investment really, really badly. Timmy, is the insecurity issue a headwind to FDI coming into Nigeria in particular?
It could be. I think selfishly, I think unless it starts, as cool as it sounds, unless it starts affecting, oil production again, I think that's when it really bites into FDI. Because as cool as it sounds, I think they don't really care. Or am I wrong? But then things happen like in farmlands, it doesn't really affect their investment. It's when, or like revenue derivation. I think it's when it starts affecting oil production, that when it starts having an effect on Nigerian bottom line, that investors sit up and start getting worried, because again, that has an effect on their own returns. But obviously, it gets to a point when the security is more widespread. If it has a general like always is already a dark cloud over the country, but if it escalates some more, then it could, taint the picture some more. It could, just overall rising insecurity is never good for economic prosperity. And, there's always worry that it could escalate into something even more awful.
What about delay in reforms? Petroleum Industry Bill, 14 years now hasn't been passed. Deregulation of the downstream sector in terms of subsidy payments and so on. That discussion is still going on with Labour. Cost-effective tariffs for electricity. That's still looking for that to take place. Do any of these present possible hurdles to FDI if they don't see the kind of reforms that they're looking for?
Oh yes, for sure. Because the whole idea of these reforms is to open up the economy in a sense, or to make it more, I don't know what I'm looking for, but to open up more revenue streams, to make it more reflective of like current life, of the current situation on the ground, and just opening up some more would just attract more FDI. But then by just delaying all this, because you see a lot of like a lot of investors complain about the PIB one. They said in waiting for years that could open up more potential like streams of investment for them, more projects that they can invest into, and then waiting for years. So that's just one instance where, again, because it's been delayed, you can see the investment not coming to certain areas that could arise from that bill. And the other ones would probably make it easier for population. They can make things cheaper. That could be a boon for businesses and can just attract more investment that way. And obviously, just by delaying that, it just makes it tougher for everybody. And it just, because when you're paying so much for electricity, the cost is so high, and nothing you can do. There's no way you're attracting investors. But once that's under control, it makes it easier. It makes it more attractive for investors. If you're not paying so much, electricity tariffs. Everyone complains about them. Businesses, households, they're crazy.
Got it.
Right.
Got it.
This message from Ben. Ben says, good morning, crew. I read on Nairametrics that our Nigerian stock index is the only one negative in Africa currently. What could be the reason behind this?
I have to take a look and see if that's true, if that's the only one that's. It's still half year, but Timmy, how would you describe sentiment on the market? I guess that's the question.
The reason, so if you remember, Nigerian equity market has never, it's not been really an attractive thing. I think last year towards Q4 last year, we saw that sharp interest that it finished 50% year on year. And there was always going to be a lot of profit taking, like come this year, because of how well it did last year. So I think there's the element of that, there's a huge element of that. People just taking their money now because you're not expecting equity index to have another great year like it did last year. So there's an element of that. We've always said there's still some fundamentally strong companies there, but Nigerians investors as a whole don't really play in the equity market like that. Nobody, especially with investors, nobody likes to risk like that. So that could explain just profit taking and just the general sentiments we have towards our equity market to just explain what we're seeing there. We usually wait for foreign investment to lead the way in investing. If we see they're interested, then okay, then it must be good. But we're not seeing that, so we're not going as well. So it's I don't think there's anything too. I think it's just what it is for Nigerian market.
All right.
Val, go ahead.
Yes, there was a question from Tokwe. Tokwe is asking if there's a significant advantage of the petroleum industry bill in the petroleum industry in Nigeria. Like, what is it? What's that significant advantage? Why is everybody pushing for it?
It's a reform now, because it reforms for example, it breaks up NNPC. NNPC is broken into pieces. It's going to be listed on two stock exchanges, NGX, and I think London or something else. So it's much needed reforms for the oil and gas industry. That's why they've been, that's why there's so much noise about it. Tell me, what do you think? I mean, why else are we making so much noise about PIB?
Oh yes, I think it just reforms. It creates more products or opportunities for investors. And again, like the current one doesn't seem fit for purpose. I mean, we're pretty much losing money the way we do it, and it just makes it more flexible, more dynamic. Brings it into really more manageable pieces. And again, once there's an opportunity for investors to come and make money, you can understand why they push for it. It's really a no-brainer for them to want this.
All right, thank you so much. That's about the size of this segment right now. Yeah.